What is going on, everybody? And in this video, we are giving a state of the market in stock picks for May 10th, 2022. So that sounds like something you're interested in. Consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead. Because in this market, anything is possible. So, being said, as you can see, technical wise, I'll just jump right into that since you can see it. This is something I've been talking about. You've seen this. I've been talking about this pattern the past couple of days on the banks. You're looking at a descending wedge. Now, typically, what happens in a descending wedge is there's a almost a parabolic move, almost a 75% uh, push up to the top of to the peak of um, this wedge. Typically, what happens, you're looking roughly around that 420 mark is something I'm seeing going into the next couple of days. Now, as far as the market's concerned, state of the market, it's pretty basic right now. There's a lot going on, but the best thing to understand when you're talking about the market is to simplify everything. What is new, what is shiny, that is what matters. Everything else that's happened, it's happened. The world is a shitty ass place. It doesn't matter. Ultimately, understand what is really going on with the market, the current sentiment, and that changes. This is why I do daily videos, because it changes on a dime. New information comes out. Old news that once carried a lot of weight doesn't carry as much weight anymore. So that's something you have to be mindful of, because it's a constantly changing environment. And to think that it is not, you would be in the wrong game if you think that this thing is just going to be plain black and white, because that's not the way this works. And even to carry on with that, even doing trading or anything like that, investing is one thing, trading is a different thing. Trading, you have to have a solid process that you don't that you refine throughout the years. It's something you have to understand. You have to refine it, and it has to be a solid process. It can't be a guess on how you're going to go about it. That requires a lot of discipline and a strong process. So, being said, going into state of the market, what we're kind of focused on, everybody's talking about the core CPI. Because of the fact they're trying to gauge, is the Fed really going to go with a 75-point basis move? That's the only reason the core CPI really matters at this point. That's why it's carrying so much weight, because people are fearing that there's going to be a 75-point basis move, when initially a 50-point basis move was unnecessary. There's that theory out there that Cathie Woods has, that essentially, and I know a lot of people may not like Cathie Woods. I think she's still a very brilliant woman. You have to stand alone to be able to make a difference, to make bigger changes. She was very popular at one time. You have to understand that another time she was not. You're going to go through cycles. But nonetheless, my opinion of her is that she is still very smart, and she still knows what she's talking about. And she just came out with another video essentially explaining her thesis is that the Fed is trying to save face. And so what they're doing is raising rates faster, because they feel like inflation is just going to get away. They don't want to go down in the history books as the Fed that let inflation get away and destroy America. So to combat that, they're just going full throttle on rate raises, which is not a good idea, because you're just going to crush the market. And that's exactly what they're doing right now. Right now, my theory is that we've priced in a 50-point basis move. We're trying to price in a 75-point basis move. I'm not talking about every increment. I'm talking about, it's 25%, whatever they tack on. So the first one was 25-point basis. So my idea was they went 50-point initially, because they thought that was the worst case scenario. Came at 25, we blew up. The next one, we got 50. The market liked it. That's why we had that pop last week. Because that's what we were looking at. Now they're talking about 75. Okay, well, we haven't priced that in, so that's another 5% on the SPX index is what I'm thinking. The kind of ratio I'm thinking. So every 25-point basis they go beyond what the last rate was, the market will correct 5%. And so that's what we're kind of seeing right now. We're sitting. If we zoom out on the daily here, so if we go from the peak in January to where we're currently sitting at, because we came down pretty low today. So we came almost to 18 today. So I could really see us possibly hitting 2% tomorrow. If we hit 2%, we hit 20% for the year. I think that will cover a 75-point basis move. And again, it's not judged off of every meeting that's going to be 75 points. That's what they're talking about. But if it's 75 points, the market is taking for every 25 points that's incremented, the index is essentially correcting 5%. And so I think if we do hit that 20%, I really see that being a strong reversal point. And also being said, I'm looking at the SPY. I'll jump back to the SPX here. But what I talked about was this critical point here yesterday. I've been talking about it for about a week, the 41.22, because we've been flirting with it for a week. We flirted with it all last week. We almost broke below it on Monday, and then we zipped back up. That's what I kind of think we might do here. But like I've always stated, in the lower time frames, you get a break and you're going to get a retest. So I'm expecting a pop towards the end of the week to retest this 41.22. It's going to be very parabolic and very fast. And so you have to understand that if you're not, if you're not long-term investing, if you're intraday, definitely do not hold anything. Could get a really nice pop back to that 41.22 is what I'm looking at. And then get a hard rejection against the first break and retest. You're going to get a hard rejection. I think that hard rejection is going to be the reversal spot. So if we hard reject, we might even come back down to the 38.61 at that point. But you have to realize that we're getting in a state essentially where we're going to, I think, reverse and head back up. I think if my thesis is, again, that we're trying to correct another 5% on the index. Once that's priced in, then the market will just start pushing up. And if you get good news, it'll really start going parabolic. But ultimately, I understand once that's priced in, if the Fed comes anything below a 50 in the next meeting, this thing is going to start ripping. And we saw that here, but it's going to be more of a permanent thing to where we're going to start attempting to go back to all-time highs is what I'm thinking. And then I think eventually towards the end of the year, I think the Fed's going to calm down a little bit, realize that, hey, if inflation is not getting away. There's also some numbers that came out about used cars have come way down, and that's like 1/3 of the gauge on inflation. Yes, I know people talk about food and everything, but food isn't tied into inflation because it is very volatile. Again, something else Kathy Woods also spoke about. So, but being said, so this point, what we're really looking at, we're looking for that retest, which is going to happen this week. More than likely, we'll get it tomorrow because we have that wedge I was pointing out. You have a similar wedge here on the SPX. You can see it a lot clearer on SPY. We have a similar wedge here being developed. And again, this wedge, you're going to get about a 75-point retracement on this move. So you're looking again roughly around 402. So that brings us back over the monthly. But you have to understand on higher time frames, that could be a wick, right? And so you could wick right below and get slammed back down, which I'm expecting. Again, it's going to be the first retest after a clean break. And this is a clean break because we closed below. Go back here on the daily, we actually closed below it. So this is a pure clean break here. And again, the wedge. So you're going to get one retest, and you get one more slam down, I think. That will be, I think, the entry. I think that will be bottom. I don't like to call bottoms, but more than likely, I think that will be our bottom. Again, everything to go to zero, but I've been able to read charts pretty well and read price action pretty well. Not saying it will. This is not financial advice. Most definitely not. But I think that's going to be our reversal spot. That will get us enough time to start breaking up and start running back. I think we're going to get some kind of parabolic run once we get that 5%. Again, we only need 2% to reach that, to have that priced in moving into the next meeting. And then again, you're going to get volatility coming around that meeting. And then again, if they come 50 points or below, which I think they might only do 25 on this next one. And then if that does happen, then I think we can start ripping and pushing back up. And again, you've got tons of resistance now, so you're going to be having to break through a lot of different things to get back to where we were just a couple of weeks ago. It's not that long ago. We were talking about all-time highs, and then we had the Fed. So being said, that's what we got in the general index. Now talking about Bitcoin, Bitcoin is flirting around that lower level. I talked about that 32 mark. It could continue to fall. I'm really watching this zone, and I talked about that 32. Ultimately, we're still in the zone, right? So you got this. This is a weekly zone, and you got the 200. We haven't touched the 200 on the weekly, and look at how long we've touched it. This is something to pay attention to. Most people don't pay attention to this. People think this is just going to crush down to 20. I mean, it could, and then wick back, right? It's very much a possibility when you're looking at these higher time frames. It's what that candle will close at. I think this candle could come down to 27, hit that 200. It hasn't retested, and this is something I've talked about in every chart. And if you followed me at all, this 200 on a higher time frame is a huge reversal point. Now you could say, well, Marcus, that's a lower high, right, or a lower low right here. Yes, but when you start talking about the 200, that is reversal. Higher time frames, it is a huge reversal. If not, you're going to get a huge bounce out of it. So I can see us bouncing all the way back to 42. This kind of all leads into getting over the core CPI and kind of guessing what is going on with that 75-point basis move. And it doesn't even have to be, it's not even really about the core CPI. Again, I don't even think that really even matters. I think what matters is we have to get 5% because that prices in 75-point basis move. Once we reach that, the market will start going back up. That is purely my opinion. It's just an educated guess off of my experience in the market and what I'm seeing. So I think that lines up with everything. It would cause Bitcoin to push back up, and then the whole market would start pushing back up. And then from that point, I think if we can get a low, if we get 25, if we get 50-point basis move or lower on the next Fed meeting, that will reverse the market in general, and then we can start pushing up. And once the Fed start to calm down, stop getting on the horn and freaking out about every little thing, talking about 75 points again, because they're protecting their ego, so they're going to get on the horn and say a lot of different things to save face. That's what they are doing. That is right. They're in elected roles. That's what they have to do. They have to try to save face that they did everything in their power. Because again, they don't want to go down in history as being the Fed members that let inflation run away after the pandemic. So that being said, that's pretty much what we've got. As far as like plays looking at, I'm really been watching the index in general. Tesla could potentially go down to 700. I mean, right now you're getting really close to this bottom channel. I actually took a small position in this because of the wedge on. You're actually smacking that bottom channel right now. So you're in a good pocket right now. That's 775 on Tesla. You can get a nice bounce back up here. Again, we haven't retested this 859. So that's something to keep in mind. Even if we do bounce out of here back to the 859, you're going to get a hard rejection, maybe back down to the 800, and then maybe we'll take off. Again, the whole market in general kind of looks the same, but that's what I'm kind of watching for on Tesla. Again, with a rally, you would definitely want to keep something like Tesla on your radar because these are the first ones that reverse. And when they rip, they really start ripping, and then the other ones will lag behind. And with everything that's been going on, people aren't going to want to jump into these mid-cap, lower-cap stocks. Palantir had earnings today. They got absolutely obliterated. UPST just had earnings. They got 50% haircut. These guys just literally had earnings, 50% haircut, chopped in half. There was an article that came out a couple of months ago talking about how people weren't paying their loans back. Again, if you don't know anything about UPST, it's essentially an AI automation for loans. And so being said, people aren't paying these back. Obviously, the pandemic, people don't have the money for it. Inflation, whatever the case is, they're not getting their money back, so they're losing money until the market starts growing back. I mean, this is one of the bigger gauges right here. If people aren't paying, if people are taking massive amounts of loans out or paying them back, this is huge. So being said, I have to see where this does end up. This one could be good play tomorrow for a short. ultimately, I don't think after a 50% haircut down to 45, trying to get back up to 80 is not going to happen. But you can look for the 71. Maybe it bounces back up to 71 by pre-market. It's still a big bounce. If it does get to that point, it would be a really good rejection off there. Otherwise, this thing could probably sink even more tomorrow. So we'll be watching that one. AbbVie is one I've been watching. I haven't really pointed this one out a lot, but if medical does take a dive, this one has got a lot of room to drop to that 200. I don't think it's going to hit the 200, but it'll come pretty close to that 140. So I'm kind of watching that tomorrow as well. Let's see what that one has. And then I think that is pretty much it. It's kind of just waiting to see how the general market is. Again, I don't think you should be jumping into anything just to play. That is one of the worst mindsets to have, is that you have to play every single day, especially considering that the most action you get during the day is essentially that first hour and the last hour of the day, and the rest of the day is pure junk. I was even watching the option contracts on SPX all day, and after that first initial move, that contract got chewed up. Even after that initial 1 hour move, it pumped, I think, $3 on option contract I was playing, and then from that point, it chopped. It chopped for about 20 minutes, and then it moved down again. That contract was dead. Even though it moved, that contract was not even moving anymore. And so this is something you have to be mindful of, is a lot of these contracts are doing the same thing. So you have to be very careful, and this is why it's also better to play a beta stock because they move bigger. These mid caps, small caps, they've been moving pretty good in that first hour, but aside from that, they're pretty much dead all day. Most things are pretty much dead all day, but your contracts get chewed up even more in those mid caps and small caps because of that. So that being said, if you've made it this far, that's pretty much what I got. Again, there's a lot of info going into this week, a lot of theory and my thesis going forward. I think could kind of help people give insight in the way I'm thinking. But nonetheless, if you did enjoy it, go ahead and drop a like button. Until next time, I'll see you guys later.